Welcome to the channel. Today's date is December 3rd, 2024. And what we're going to be talking about today is one of the biggest problems that investors have, especially when we're in bubbles like this, and that is patience. Let's get straight into it. As normal, we go what the market is doing today. The Dow Jones is up 53. The NASDAQ is down 49. The S&P is up 2. So not much really going on. It's real interesting since the last time I made a video. The 10-year yield is down to 4.22, which, I mean, last time I think I made a video was about 4.4 something. So that means interest rates is going down. That's good for the economy. And that's obviously people think interest rates are starting to trend down. So today what we're going to talk about patience, especially in a bull market like we're in now. And if you sold all your stock, I sold majority of my stocks about a month ago. I said that this just got too dangerous for me. And what do I mean about dangerous? I live in upstate New York, and we got this river called the Black River. And it's a real dangerous river. If you fall in this river, your probability of dying is very high because the currents underneath, sometimes it will be rough up top. Sometimes it may look smooth, but the currents underneath are just so bad that if you get caught up in this river, you're more than likely going to die. And that's what I consider this market to be that we're in right now. And it's so high, it's so bubble. I mean, it's such at a bubble to me that if I believe I put $1 in here, as Graham said in The Intelligent Investor, if you're trying to chase that one last dollar, you might have you probably got a better chance of losing $2 than to make $1. So we wanted to give an example because in the last version of The Intelligent Investor that I bought, they actually use Sir Isaac Newton as an example of how you can get caught up in a bubble. So in this example, Sir Isaac Newton, if you don't know who Sir Isaac Newton is, he was a scientist and one of the greatest thinkers of our time. He was a physicist. He basically helped define the laws of gravity, the motions of planets and stars, and he actually invented calculus. So I mean, Sir Isaac Newton was really, really, really smart. So what happened is during the 1720s, which was one of our first bull markets ever, Sir Isaac Newton got this tip from a friend who told him to invest in the South Sea Company. And as you can see on this little chart that we have right here, Newton invests a little bit of his money in about 1719. He made a little bit of money. He sold his shares and he was happy with it. Then what happens with a lot of people talking about the investments here. Matter of fact, I hear it everywhere now. Everyone's talking about it. So Sir Isaac Newton's friend made a boatload of money and got rich off of it at a price and at about 500. And then so Sir Isaac Newton got caught up and he sold. If you read up on it, he thought that it just got outrageous. The market was just going up too much. Evaluation was out of control. So that's why he decided to sell it. But he got caught up in the euphoria and entered back in at 700. He sold at close to 400. He got back in at 700. And if you don't know, Sir Isaac Newton went broke twice, even though how smart he was. He went broke twice. And the stock kept going back up. It fell. So then in 1720, so within like a year time frame, Sir Isaac Newton went broke. And if I had to guess, for him to go broke, he had to be using margin on his stocks at the time. And that's one of the mistakes that you don't want to make. It took me a long time to learn this. I don't care how much. I decided that the market was too dangerous. The money that I made, I wasn't giving back. And I believe that there's going to be better opportunity on the other side. And the good thing is that you can still make money, and which is good for you, and you can still trade T-bills. That's what I use to kind of satisfy my urge to want to trade. I make sure I have T-bills that expire every so often. So I do feel like I'm doing something. I am earning some interest on it. They're still paying about 4.5%. So it's satisfying my appetite to want to trade because I know that the waters are too dangerous for me to be swimming in. So, and here, I just read a little bit of this. early in the run up of the stock price, Newton bought and sold the stock for a good profit, but he then decided to reinvest in order to make even more money. As you can see from the chart below, he did not at the time. And he said, I can calculate the movement. And this is interesting because Graham played a part in this, which is why I wanted to read it. I can calculate the movement of stars, but not the madness of men. And that's what we got going on right now. We got madness of men. And so one of the things, Ben Graham and mentor Warren Buffett, a highly successful investor, this kind of intelligence, talking about Sir Isaac Newton, has nothing to do with IQ or SAT. I tell you that he wasn't talking about Sir Isaac Newton. He was talking about what it takes to be a good investor. Do with IQ or SAT scores. This kind of intelligence is a trait more of a character than of the brain. Instead of IQ, Graham says the virtues such as courage, self-discipline, patience, which is the word that we're using, are the essential ingredients of long-term investing success. And I was talking to one of my friends of mine, and I made a video before over the investor's dilemma. And it's in an ideal world, you want to buy low and you want to sell high. But you got to have some measurement. And what we use is, man, we don't use, I don't use charts. I don't use any of that. I use the valuation of a business. And I talked about Mr. Market in one of my videos. So what I try to do is, and it takes a lot of patience and a lot of courage, is I try to buy when I believe companies are cheap, and I try to sell when I believe that they got too expensive. And I use a house. Let's say you bought a $200,000 house, and you've seen it for some reason. It was listed in the market, and it was listed for 100,000. You'd jump all over that, especially if it's the house that you want. You'd jump all over it. So you buy the house at 100,000, and that's when no one wanted to buy houses. They thought everybody was going to live in apartment buildings or something, and no one wanted to buy houses. So the price shrunk down to 100,000. But everybody ended up not moving into housing, because we kind of had that example during COVID where people was moving out of cities, and then it was inflating the prices of houses outside of the city because so many people wanted to get out of the city. And then now they're going back to the city. The prices of condos and stuff in the city kind of went down, but now they're back up and skyrocketing. So if you bought that house and then it came back and you say, you know what, this is my house that I want to live in forever, and I got such a good deal, I don't ever want to sell it. But let's just say, 2 years from the time that you bought it, somebody came and knocked on your door. Everybody decided not to move in apartments, and they decided to move back in houses. And they wanted the house so bad, they offered you 500,000, and you felt as though the house was worth 200,000. At that point, I would probably sell my house and go buy me something. Hope I can get something at a discount. That's kind of how in investing go. And as Graham said on there, you don't have to have a high IQ. You don't have to be smart. Sometimes those are some of the worst traders. You don't have to have, a high IQ. You just got to have patience, discipline, and the most important thing is you can't follow the crowd. You have to believe in your theses, your style of investing, and you have to roll with that. Ultimately, you're trying to buy high and sell low. And at these inflated prices that we are in right now, I think that it's too dangerous. And I always go back to my Buffett quotes: be greedy when others are fearful, and be fearful when others are greedy. And now is the time to be fearful. Good luck investing, and we out.